6 Best Private Student Loan Refinance Companies. If you're considering refinancing private student loans, you should move quickly before interest rates rise any higher. Borrowers with federal loans, on the other hand, are better off waiting until the one-time loan forgiveness scheme is finalized before considering refinancing. Continue reading to learn more about our top selections for the best private student loan refinance companies in 2023, as well as industry insights and the most recent information on student loan debt forgiveness. Best Private Student Loan Refinance Companies. PenFed. Pentagon Federal Credit Union, sometimes known as PenFed, is the nation's second-largest credit union that offers student loan refinancing for borrowers, students, parents, and couples, refinancing up to $300,000 in private or federal student loan debt. The firm offers fixed-rate choices with loan payment durations ranging from 5 to 15 years. Married couples can file a loan application with PenFed to refinance their student loans together. To get the best prices, the spouse with the greatest degree should apply as the principal candidate. Unlike standard refinancing, PenFed's couple loan requires only one individual to have finished at least a bachelor's degree. Parents can also refinance and transfer their Parent Plus loans to their children. Other lenders require the parent to remain on the loan after refinancing. But PenFed allows your child to apply for refinancing and absorb your debt, freeing you from payment responsibility. The refinancing minimum annual income requirement ranges from $42,000 to $50,000. Depending on the loan size and whether a cosigner is present. You will also have access to member rate savings, an information center, and financial offers as a PenFed member. Earnest, which is backed by Navient, provides affordable rates and many loan repayment alternatives for its private loans and student debt refinance. The organization employs a novel underwriting strategy that considers the borrower's earning potential when determining the loan's interest rate and monthly payment. Earning potential is determined by the applicant's degree, payment history, and credit score. According to the company, this is advantageous for recent grads or consumers who may not have the credit history to qualify for refinancing elsewhere. Extending a loan term by a few months rather than adding 2 to 5 years, as most lenders do, allows borrowers to set an acceptable monthly payment without extending the loan term needlessly and paying significantly more in interest rates over the life of the loan. Certain restrictions may apply. Citizens Bank refinance loans are accessible to U.S. citizens, permanent residents, and resident aliens with qualified cosigner around the country. Borrowers must have a minimum of $10,000 in student loan debt to refinance with this lender, and they can refinance up to $149,000 in undergraduate loans or $150,000 in graduate loans. There are fixed-rate loans available. Loans can be paid off over 5, 7, 10, 15, or 20 years, with cosigner discharge available after 24 to 36 months of on-time payments. Benefits. Borrowers have the option of variable or fixed-rate loans, the ability to refinance without first completing a degree, and no prepayment or origination fees. However, there are certain drawbacks, such as the lack of a disability discharge option and the lack of a minimum credit score disclosure. The good news is that prospective borrowers can determine eligibility with only a mild credit check. Edvest and U. Although the loans are administered by the nonprofit New Hampshire Education Assistance Foundation, residents from any state can apply for them through Edvest and U. The highest amount you can refinance for undergraduate loans is $249,000, and the maximum amount you can refinance for graduate loans is $199,000. Borrowers can choose between a fixed-rate loan and a variable-rate loan. Pros. Edvest and U offers various advantages, including the option of fixed or variable-rate loan alternatives. the ability to apply while still enrolled in school, and the ability to refinance without completing a degree. There is no origination fee or prepayment penalty as well. Cons. Borrowers must provide 2 personal references in order to be authorized, and an 800 credit score is required to qualify for the lender's most reasonable rates. Empower Financing. Empower Financing is a public benefit organization that specializes in financing overseas students' higher education. It provides a fixed-rate loan with a cosigner as well as the collateral release. Foreign loans sometimes require borrowers to put up collateral such as property or financial assets. Australia, Austria, Brazil, the Dominican Republic, Germany, India, Kenya, South Korea, Mexico, Nigeria, the Philippines, Switzerland, Spain, the United Kingdom, and the United States are all eligible for refinancing. Canadian citizens and permanent residents are currently ineligible, despite being the only lender on our list that caters to overseas students. Empower's loan terms are less attractive when compared to competitors. Fixed interest rates are among the highest of any company we surveyed. There is also no variable rate loan option for borrowers who want to capitalize on market volatility. MEFA loans are made accessible by the Massachusetts Educational Financing Authority to residents of any state. There are variable and fixed-rate loan options available, and borrowers can repay loans over 7, 10, or 15 years. MEFA demands a minimum of $10,000 in student loans and a credit score of 670 to refinance with them. There is no loan maximum, making this lender an excellent choice for consumers with significant student debt. Benefits of borrowing with MEFA include refinance options for people without a degree, the option of a variable or fixed-rate loan options, and the fact that there are no origination or prepayment fees when applying with this lender. Cons, however, the lack of any discounts, including a lower APR for autopay, is a significant disadvantage, as is the fact that MEFA does not allow cosigner release or offer any forbearance or postponement choices. Conclusion: refinancing student loans is not for everyone. If you can afford your debts on the typical 10-year repayment schedule and do not intend to participate in any student loan forgiveness programs, you should strongly consider student loan refinancing. These are the best private student loan refinance companies, and evaluating your alternatives among these lenders would greatly benefit you. Additionally, keep an eye out for our list of the greatest student debt refinancing bonus deals.